Hello and welcome to Crypto Weeklies. In this video, we talk about Ethereum and ETH, none of the content financial advice, as ETH approaches one of the key milestones in the bear markets, which is this white line over here, which is the time-weighted average price. As the price of ETH is very close to the time-weighted average price, it's a good time to make this video. This time-weighted average price could be understood by this concept of gravity of time over here. This is not just looking at the price currently, but throughout the course of the last 8 years, since we have been tracking ETH price action since 2017, sourced from Yahoo Finance. This is, again, I know ETH got launched in 2015, but it was largely an unknown entity since till that euphoria peak for ETH in that 2017-2018 bull market. So tracking the price of ETH and using this gravity of time approach, we're not just looking at the current price. This model looks at the risk analysis for ETH, where it has spent its entire life at one day at a time. So rather than having that outlier where, let's say, one day price spends 10x of the time, 10x at 10x value, whereas the rest 1000 days it spends at only 1x value. So accounting for the time spent at those valuation shapes this time weighted average price. So for example, if the price is spending a lot of time below the time weighted average price, this average price gets dragged down with it. If price starts spending a lot of time above the time weighted average price, the time weighted average price gets dragged up to it. But again, not just like 20-week simple moving average or 100-week simple moving average, which only considers a specific look back. The look back for this area is the entire life itself of the asset. The key is when the price is undervalued, that is for high quality assets such as Bitcoin or ETH in the crypto asset class, when the asset is spending the time, very little time, that is under the time weighted average price, like ETH did in towards the end of 2022 bear market. Also a handful number of days in 2025 when the price went sub $1,500, and now again the price action has found time weighted average price as support, where the price action in that early February drop did not fall below the time weighted average price. Now the difference between the price and time weighted average price is about 20%. That means again the price is very close to the fair value or equilibrium, that is near the time weighted average price. The asset, that is ETH, is in natural state, that is it isn't too overhyped or too ignored. This is the baseline value that has been created by years of trading for ETH. When the price is overvalued like it was in 2025 and in 2024, you can see the risk level at that point was risk level 8. If we toggled the risk levels, you'd notice that in the 2025 bull run, price action did not go to level 9 or 10 over here. Peak was at level 8, whereas in 2021 level 9 and also level 10 was achieved for ETH. That's because back then there was a prolonged alt season, whereas in 2025 there wasn't much of an alt season or any excess liquidity that got flown from Bitcoin to ETH. So barring that rally from the April lows to the August highs in 2025. Now that the price of ETH is at risk level 2, we can compare the historical times where the price was in that risk level 2. Again, it's very near the bottom, again, not the actual bottom, but very close to the bottom. If you always wait for the risk level 1, again, you would miss out in the pursuit of trying to time the actual bottom. There might be scenarios where, again, at risk level 2 or below, the number of days below where the price spends below these levels are so minimal that again risk level 2 is also worth consideration. Again, not financial advice. This time around, what I expect is ETH spending a considerable amount of weeks to months below the white line, which is currently at around $1,700. The price of ETH is at around $2,000. This chart is available on cryptoweeklies.com, link on the bottom of your screen. This is my own website. I created all of these analytics for all the community to take into the consideration the data science or data analytics driven, machine learning based, as well as just sound financial analytics based interpretation of where the price of the asset is with respect to its historical price, what the price action could do using the machine learning forecast. We have our own in-house trained machine learning models. Again, they're not AI prompted models. They use sound machine learning techniques. So for example, over here, the machine learning forecast for ETH, if let's say price action were to stay 2 to 3 months in the downturn, let's say from mid March to mid May, then the floor for ETH in that one standard deviation non-panic bear market for ETH is slightly under $1,500. This is derived from, again, weekly average price of ETH since 2017 and seasonal ARMA based time series forecasting based model that we have trained in-house. And this yellow line is one standard deviation confidence level to the upside. Green line is one standard deviation bear case to the downside. Base case is this pink line. So about 68% of the chance that the price stays within these bounds. If you increase the bounds towards the bottom, again, 2 months of panic could take the price action of ETH close to $1,100 per this case. Again, one could argue that the panic case for ETH has already materialized, and if not, again, 2 months of panic. Again, in the last bear market, that panic lasted for 2 months. One could argue from first week of April in 2022 and ended in June. But what we have over here this time around, again, the first major drop started in January 2026 itself, and now the price is reeling on those on those lows that formed in mid-February. So 1.5 months into that panic case already in the bear market, and then potentially again after this intermediate seasonality, 1 more month of bearishness could be, again, timeline to be decided, but let's say 1 month of bearishness, the price of ETH in that environment, in that panic scenario, could be as low as about $1,300 rather than going all the way to $1,100. That's the panic case. What if there is a counter trend rally, 1 month of counter trend rally using historical data in a non-euphoria counter trend rally that usually happens in the bear markets? 1 more month from here would be at around $2,600 for ETH, and if the and that would help shift the floor of the bear case as well. All of these models are live, get updated every day, and use the same techniques without any manual intervention to this model. The arguably one of the more important model is this diminished decay based fair value interpretation. Fair value is a mathematically derived 2 degrees of freedom polynomial regression based attempt of cutting the price action into 2 halves. The top half is where price is overvalued, bottom half is price is undervalued. Right now, per this model, price action for ETH is undervalued, and again, accounting, you can see the thickness of these, the distance between the green line and white line is changing. That's because it's accounting for diminishing volatility, as the price is not just lower than the fair value but also lower than the 1 standard deviation residual drawn from the fair value. Price action right now is in this undervaluation phase. That does not mean that the price action cannot go lower from here, but in the larger scheme of things, accumulating ETH below $2,400 per this model is considered in accumulating in the undervaluation zone. Typically, opposite of this from the fair value is the overvaluation 1 standard deviation band. That's where peak for ETH arrived in early March 2024, and all the subsequent peak, although August 2025 was higher, it was lower in terms of the overvaluation zone that was derived from the regression based channel. That means, again, had ETH gone to $5,500 in August 2025, that would have been a great indicator at that time to sense that ETH was nearing a top. We had other indicators back then which signaled the same top under the SMA risk interpretation, the risk triad that we like to call. This is Bitcoin, but if you can toggle this to ETH price and ETH risk, you can see that back in from July to August 2025, this model had peaked and indicated that the top is along the way. the bottoming indicator for ETH right now, again this is Bitcoin, but toggling to ETH risk, and ETH bottom has not triggered that bottom indicator. But what happens typically in the bear market, again it indicated a bottom in April 2025, but you could notice that in June 2022 itself it indicated that the price of ETH has reached a floor. Something similar might happen towards the end of the bear market, but again right now the zone that ETH is in per this bottom indicator is still within the bounds of accumulation zone for ETH. And accumulating where the price is in this zone is, you can see with respect to the price of ETH in this dotted color codes, you can see accumulating at those levels, not the worst idea historically speaking. And if you would like to normalize the behavior across the two distinct models, the top detector and the bottom detector, and come up with a composite risk view for ETH, it's right now at around 0.21, and at the previous bottom the risk was at around 1/10 of that, at around 0.02. So even in April 2025 it was 0.046. So those kind of metrics have not triggered a buy zone yet, but nonetheless ETH risk as it stands, with respect to the time weighted average price, you can see the composite risk for ETH is still within accumulation at around 0.276. Anything which is lower than 0.3 is typically accumulation per this composite model, which takes into consideration all of these individual models, the regression model, the time weighted average price model, and the 20-week simple moving average price model, which had indicated a peak in August 2025. You can see the risk levels with respect to the 20-week simple moving average were better understood by this standalone model, which at the peak had pointed to a risk level higher than 0.8. That means at around 0.8, that means risk level close to risk level 8 as understood by the decimal based model. So in that August rally, that was the case for ETH. Now the risk level for ETH per this model is in the lows of the second level, risk level 2, that is between 0.1 and 0.2 risk for ETH. Typically at the bottom, what happens that the floor, when it reaches a floor like it did back in February 2022, and February 2026, as well as in January 2022, typically what follows is at least one strong counter trend rally like it happened in April 2022. If we are there, then there might be some further drops in May-June time period for ETH, maybe setting that floor close to that $1,500 level, $1,300 to $1,500 level, and then maybe forming some sort of a bottom at that point. That's always possible. All in all, if you were to look for any potential bear market bottoms for ETH, typically at this stage of the bull run, the worst case scenario for ETH is at around $1,500 as estimated by these time weighted average price SMA model and the regression risk model. The weighted risk for a ETH bottom is at around $1,400 to $1,500 at the worst. That's about 30% down from here. These models takes into consideration the individual model and tries to tune out all of the noise of one individual model using these techniques. All in all, if to conclude on a bullish note, let's say 2027, 2028 market does eventually recover and we go into 2029 with the same risk models, instead of trying to attempt to find the top, attempt to find a bottom and attempting to find a top at that level, the base bull case for ETH is at around 9,200. The average of the bull case is at around 11,000. Taking an average of these two, the midpoint is somewhere close to 10k, which from here is roughly speaking 5x when the price of ETH is close to $2,000. Let's say if price falls to $1,500 at bottom, a rally from that point to let's say 10 to 12k is roughly speaking close to 7 to 8x from that bottom to peak. And that would be something similar to what Bitcoin did in the last bull run from bottom to peak over here, where the price rose from that $15,500 to that 120k, 125k. That is again what you can say 8x. ETH is just 1/10 of that. So instead of bottoming at around $15,000, 1/10 of that would be around $1,500, and then in the next potential rally, ETH goes to 12k and forms a top at that point. There is some evidence, again very less evidence, but some evidence that price action of ETH is moving one market cycle lower, like one market cycle below what Bitcoin did, just with 1/10 x. So for example, in 2017, Bitcoin topped at around 2k. In 2021, Bitcoin topped at around 60 to 69k. Last time around, again evidence is very anecdotal, Bitcoin topped in 2025 at around 5k. The cycle before that, ETH topped arguably more significantly. Instead of topping at around $2,000, it topped at around $4,500. The cycle before that at around $1,500. So again, lose evidence of ETH being one cycle below Bitcoin. But if bottom for ETH is closer to that $1,500 level, the area of support over here that got challenged in April 2025, and then if that is the bottom for ETH in this market cycle, then and if there is a decent recovery in 27 and 2028, 2029 could be where the price action for ETH finally breaks out of this range and forms that 2.618 peak at around $11,000. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.